This channel is for educational purposes only. You and you alone are responsible for your investment decisions. Today I'm going to cover my latest options trade, selling a put against Sofi. If you followed me so far, you know that I retired in my early 40s, and I decided about 8 years later to come out of retirement and show you how I did it. I took the Tesla out, did a few Ubers to raise some cash to invest, to prove that you don't need to be a doctor or lawyer to become a millionaire, and some side work that earned me $290. I also sold NVDA and made $91 and SPY and made $13. Finally, I sold cash-secured puts against Tilray and Sofi and made $14 and $61 in option premiums. Today I'm talking about the Sofi trade because that happened yesterday. All right, so it took a couple weeks, but now I have a couple $1,000s to invest. I'm going to go ahead and try to find a stock that's between the $10 and $20 range that I believe is growing that won't go away anytime soon. So in the past, I've used the Motley Fool website, which is just fool.com, to come up with trading ideas. Now, it's been years since I've been in here, and much of what was available for free is locked behind a paywall now, but I happened to look at the brokers and what they recommend, and I was scanning, and I actually saw Sofi. That caught my eye. The ratings were high, so I had to take a look at their website. So what really caught my eye was the vast amount of products they offer. It's my understanding they started out refinancing student loans, which is great because they're getting the younger generation involved in banking. But now it looks like they offer personal loans, home loans, credit cards, a vast array of products. So I wanted to check and see if Sofi is a publicly traded company, something that's investable. I went ahead and searched Google, found Sofi's ticker on the NASDAQ, went to Yahoo Finance and took a look at some of the metrics to include earnings, trading range over the last year, recommendations from analysts. But what really caught my eye was the growth rate. I almost fell on my seat when I saw this. The next 5 years, they're growing at like 170% annually, which is insane. I also noted that they're about ready to turn a profit. So in my mind, this is a good candidate for an options trade, because if it does execute and I'm stuck with a block of 100 shares, I'm okay with that. Let's take a look at this trade. I sold a cash secured put against Sofi, the ticker SOFI, and I agreed to buy it at $8.50 a share. The contract will expire March 22nd of 2024. To assume this risk, I got 31 cents per share. Because one option contract is 100 shares, I received $31. But because I wrote two options contracts, I got double that amount. That premium, the $61.07, is mine regardless of how this trade turns out. Now that I've entered a contract, there's several possible outcomes that could happen between now and March 22nd, the expiration date. If Sofi trades below $8.50 a share, I would be obligated to buy 200 shares at $8.50 per share, or $850 per option contract, for a total of $1,700. The second outcome is Sofi trades above $8.50 a share on expiration date. In that case, the contract just goes away. I keep the original premium, the $61, and then I can turn around and write a new contract if I choose to. Number 3 doesn't happen too often, but on American-style options, there is the chance during the contract period that you're in the money, meaning Sofi is trading below $8.50 a share, and then the contract ends and you own 200 shares. The fourth possible outcome allows you to buy that option back. So for instance, I got 31 cents a share. Let's say 10 days from now it's trading at a nickel. I could go ahead and buy it back for a nickel and then bank the difference of 31 cents less the nickel. I'd like to highlight the last 3 things. The max profit is $61, that's the option premium. The max loss is $1,639, which is essentially the $1,700 that I have to back up this trade, less the option premium that I've already received. Now, in order to have that max loss, Sofi would have to go to 0. So I would not write this on something completely speculative. I'm banking that in the next couple of weeks that Sofi is not going away, that they will continue to grow, and if I'm forced to buy 200 shares, then I will be happy to own it. Because I'm only a few weeks into this journey to show you how I actually retired at 41, the dollar amounts are going to look minuscule. They're going to look very low. But the returns, that's what I want you to focus in on. 3.59% in 23 days. Now, a lot of bank accounts don't make that an entire year. If I was able to write this trade over and over again, I would make 57% annually. And that doesn't include the reinvestment of the option premium. When this trade's complete, I'll go ahead and do a follow-up video. If you're completely lost, I recommend you go back and see my previous video on selling a cash secured put on Tilray.